Weekend greetings, fellow traders, and welcome. This is Austin. It is Saturday, October 3rd. Taking a look at crude oil and the S&P 500 markets, and we're going to get back to these charts in just a minute, including the absolutely uncanny, unbelievable accuracy in which the CM roadmap calls price action on an intraday basis. It truly is the market's intraday profile, no question. But before we continue with that, let's take a look here at the website. I've gotten some emails from site subscribers and readers saying, do you realize your site is down, or I can't get to your link, and so on and so forth. Let me explain. What happened is this site is hosted through Yahoo Small Business, and it uses WordPress software as the platform. It's been active for several years. I can't remember just exactly when I switched to WordPress, but it was several years ago. Well, in that time, the thousands of posts that have been added to it, the literally several thousand images and hundreds of videos and so on through those years, somewhere along the way there were a lot of broken links. There was malfunctions. The image photo uploader didn't work anymore. I actually had to create a workaround where I would post images to a public WordPress software and then copy paste them over here. In other words, it just crippled along, and I tried to band-aid it. I tried to do repairs. I tried to hire somebody who could go in and figure out the internals. But in the end, none of that really was a viable choice. So what I did was a complete facelift. I just went in. I saved a little bit of the prior content, deleted it all, wiped out the WordPress software completely from the Yahoo server platform, and reloaded it fresh. Now the pages are crisp, clean, loads instantly, no problem with images and resizing. In other words, it's all brand new. Okay, that came at the cost, if you will, of sacrificing a few hundred older posts from the past couple of years, past 2-3 years. Now, mind you, I've been posting daily, sometimes multiple daily blog posts since July of 2009, and I have purged several thousand posts between that day and now. Right? I'm not a Johnny-come-lately. I'm not a newbie to the educational field, even though I don't have years and years of material archived, and there's a reason for that. Nobody looks at that stuff. All right. Of course, on the back side, the administrative side of this, we can go to any post. If you serve the same software, you can go to any post and you can see how many hits each post had, how many visitors, how long they stayed, what the average time was, when the last one was, so on and so forth. And I've said this before, I'll say it again. When you have a blog and you have archived posts, if they're any older than a couple of months, they get almost no traffic. Every once in a while, you'll get a new viewer who will come along, discover you, and will want to go back through the earliest material just to see what you were like then, to see what your to check you out, quite frankly. But other than that, there's no traffic. So my philosophy is, what's the point? When you have all of that stuff in there, it just delays page speed and site speed and things like that. Get rid of it. Out with the old and up with the new. So that's what we've done. This is the new old coiledmarkets.com. There's a couple of different features. The blog posts are still to be found here. I have the Coiled Markets YouTube video page linked here. There are also page links up in here. And these videos demonstrate a number of real-time trading vehicles, real-time trading videos that I captured. Some are profitable, some are losses. I mean, that's trading. This link here is a webinar videos page from Trader Kingdom, from Ninja Trader Brokerage, third-party sponsored public webinars that I've done. And then as you scroll down, we have the current educational programs offered. All right, so that's what's going on with the website. I apologize if your stored page link doesn't work for this. If you would kindly update that, it would be great. And I don't foresee any further changes or updates or adjustments to the site for the duration of its time. Okay, so back to the markets. here was crude oil. Here was the S&P, and of course, non-farm payroll came out. Power plunged. I tried to get short right after the news. I don't hold into or through any kind of big news. I tried to get short. That didn't happen. They dove 30, 40 points without me, much to my chagrin, and I bought and bought and bought and bought pullbacks and pops here through this whole sequence, and I absolutely couldn't hold a stop. I mean, everything I would get in, they would just stop it out. They would go, 2, 3, 5 points in favor, whip back and stop it out, and finally the market took off late in the midday. It started to take off. There was some orchestration of the powers that be, whoever it is that relentlessly hammers VIX futures, whoever it is that relentlessly hammers yen futures in order to wag the proverbial tails to move the dog. That's what happened, and orchestrated this short squeeze. The most shorted stocks were squeezed the hardest they've been in 5 years. In other words, this wasn't a buying opportunity where investors came in who were looking to hold long term. This was an orchestrated short squeeze by entities that used every alternate means possible to push the underlying market, and it worked. I expected that. You may have expected that. I mean, we've seen this over and over again, especially on non-farm payroll Fridays when they make a big move, especially down. But in the stock market, anytime there's a substantial move down, sooner or later, the people who want it up orchestrated up, and it did that. Well, there were two reasons I didn't participate in the S&P, and number one, I got chopped repeatedly through the struggle, and then late day when it made its two big squeeze moves, I had already tossed the towel on that. The second reason was crude oil didn't do much. It pushed its way lower off the news, and I shorted that and shorted that and shorted that and got stopped out repeatedly. I was short. It was one of those back chop days where every move it made directionally was an impulse the opposite direction, and you can see that here from after the pit session open. Red, green, red, green, red, green. Every move, whether it was a pullback or a breakout, had an immediate opposite reaction, and crude oil does this at times. Sometimes it'll just do that most of the day or all of the day. You never know. It did make one directional move inside of 10 minutes. This was a 10-minute span where it popped about 100 ticks. This was due to an inventory report of sorts that talks about how many tankers are full or empty or whatever, and then it went back into chop mode for the duration. So it was a very anorexic, as far as opportunity goes, session in crude oil, and it kept me so busy, so focused over here, I had to abandon my attention there. There was plenty of opportunity. Now, look at how price articulated around the open range, then went to the CM roadmap 233 zone, then to the CM roadmap 1 where it stuck, then to the CM2 roadmap 2 where it stuck for a while, then it went right to the CM roadmap 3, which we've discussed over and over and over again, and it stuck right there. I call this value the trend ender. Whenever you have a powerful trend day, 9 times out of 10 it will stop right on this 780 value. And it did. This study was added to this chart at 9:35 a.m. Eastern Time. This is not any kind of hindsight prediction or so on. And it's still, I shake my head when I will hear from readers who'll say, oh, that roadmap stuff, that's all hindsight and so on. Why don't you post real time, market calls of what it's going to do? It's like, dude, this is real time. The first 5 minutes of any pit session. Anybody who has ever seen the videos on this, and there's several of them that I just pointed out from Trader Kingdom and Ninja Trader that spend an hour each time discussing exactly this and breaking it down. Anyone who applies the same measure objectively at 9:35 a.m. Eastern Time for the stock indexes, we all see the exact same thing. Hours and hours later, price does what was projected at 9:35 a.m. Eastern Time for everybody. It is black and white simple math. It is incredibly powerful. It is the most uncanny price action study that I've ever seen. I'm grateful that I discovered it, if you will. And it truly is the market's intraday profile. I don't know what other way to say it than that. It truly is. far as the trading week goes, it was steady as she goes with crude oil. Now, I attempted to work both crude and the S&P, and I've got to tell you, I don't think it's just me either. I have never seen the S&P futures move with as much speed through the charts as they did this week, and quite frankly recently. Now, years past, and you've heard me say this, you've heard a lot of people say this, when somebody would be talking about the comparisons of crude oil futures and the S&P or the Russell or the NASDAQ or whatever, invariably it would come, somebody would come to say, well, you probably ought to stick with the S&P. It's stodgy, it's methodical, it pulls back a lot, it backfills a lot, it's slower paced, it's thicker, it's more deliberate, da-da-da. That used to be true. All right, that used to be the truth, but it's not true anymore. As a matter of fact, I happen to think that the S&P is more volatile and more explosive than crude oil many times. It's gone from being, the stodgy, methodical pullback machine to just flat out wild algo-driven spikes and surges and pullbacks and whatever. And I personally cannot effectively follow that and crude oil or any other symbol, quite frankly. I don't know whether it's because I'm almost 51 years old and I've been doing this a long time. I don't know whether it's the hyper speed at which today's markets often move or a combination of both, somewhere in the middle. I can't do it. I just can't. As much as I try, and as often as I try, and as many times as I try, I just can't do it. I have to pick one symbol at a time and go with that. And so for the most part, that's going to be crude oil because that's what I choose. Occasionally, I'm going to step off crude oil and I'm going to trade the S&P alone on days like rollover for crude or various other things that are going on. But for the most part, I'm going to focus on crude oil. That does not mean for one moment that there isn't tons of potential in the S&P. There is. There's tons of potential there. But I believe if somebody wants to trade the S&P in today's modern markets at the speed at which they move, you really need to focus on that, concentrate on that, and own that. Make it your singular focus. I think today more than ever, it's critically important to focus on one symbol, and that's a complete change from what I used to do in the past. In the past, I would personally, and I would also advocate following two or more symbols. I just, because of modern market conditions, I just don't think that's viable anymore. Crude oil, in an account which trades one or two contracts only, this is how the week went. These 3 days were rather congestive, although I happened to catch, let's see, this was a one contract move, this was two contracts, this was one contract, this was two contracts, and this was one contract or two contracts lost to where I just tossed the towel. I think that turned out to be $440 gross. This here is $510 maybe. This here was $180, I think. This was $610, and this was $380. I'm pretty sure. Well, I guess we'll take a look. Let's see. That was day one. It was $350 or $380, and then this is the account for those 5 days. Went from there to plus 1,000 to plus not quite 1,200 to plus 1,600 plus, and then settled at 12 plus for the week. 4 winning days, one losing day. Controlled loss on the losing day, and as we profile Friday, I simply couldn't find anything. I couldn't get in front of anything that worked, and I was done before that 1 o'clock jack spike. But that's the week, and I wouldn't consider that a bad week at all, not for one or two contracts. Whatever you feel you can comfortably trade, one or two crude oil contracts, and the day margin for that's $1,000 a contract. Of course, that would be suicide to try to trade based on day margin. But I would opine that a $5,000 account using a $50 per trade risk, using a minus $500 or less daily shutdown would be prudent. Somebody may want to use $10,000 or $20,000 as a buffer, and that's perfectly fine. I absolutely do not believe there's any merit to the, well, what's your return on investment? What size was your account that you made this $1,200 on? What difference does it make? Whether it was a $5,000 account, $50,000, or $1 million, who cares what the ROI was? You know, you're comfortable trading one or two contracts, you made $1,200. Have a nice week. Let's do it again next week or make more. You know, ROI means less than nothing to me. I'm sure that's of importance to, you know, stock investors or hedge funds or mutual funds or whatever. But for short-term futures trading, it's meaningless, because I might be comfortable with an account size that's far different than what you're comfortable with to trade the same position size, and we make the same dollars that we can spend, and there you go. We're both happy, and that works for each of us. Right? Very important. Most importantly, this is what we are trading. This is what I am teaching and training in the new educational program of CL Trader Coaching. Now, the CM Traders program is the same as it's always been. It is lifetime access to all of our information. If someone just wants the facts, that's it. All of the information which is currently available by recorded video, and there's more added, you know, frequently as necessary, and so on and so forth, and it's updated. If you want lifetime access to that, and believe me, we have people who've been around 5, 6, 7, 8, 10 years that still come in for refresher courses and see what's new, then you know, that's a choice. And then we also have the choice of CL Trader Coaching, and I'll let you read through this. I'm not going to do this myself, but this is a program where if somebody wants personal, individualized mentorship, where we will get together at the start, work together to get you squared away one-on-one, work together on an intraday basis, and also have lifetime access to the members-only site for, you know, post-market education information. That's all included for the one-time price of less than $1,000. That's less than what I made in net with one or two contracts in 1 week using the same information. If you would like to do that, you can. If you're doing that right now, congratulations. If you're not, we are, and we can show you how. It's not something that you're going to do right away, but you're not going to learn to trade effectively, you know, profitably, consistently in a day or a week from anyone, anywheres. It's going to take you a little bit of time. It's going to take you a little bit of work and a little bit of study. It's actually going to take you a lot of work and a lot of study and a lot of personal adjustments for you to learn to trade anybody's anything. But what we can do is shorten the learning curve dramatically. You know, it took me years and years and years of wandering in the desert lost, proverbially, of trial and error, of applying what doesn't work and losing money, and then applying something else that doesn't work and losing money, and losing money and losing money, until finally I put together the pieces that don't lose money. All right? So if you're tired of losing money, or if you're even tired of treading water, breaking even, and you're ready to really make money, to really make progress, put money in your account, keep it there, and most importantly, cash it in, move it from your trading account to your checking account, and spend it and enjoy the benefits of that, if you're ready for that, let's go to work together. If you're not, that's perfectly fine too. Keep doing what you're doing. I'll keep doing what I'm doing, which is winning, and everybody's happy. All right? So that's pretty much the markets in a nutshell. That's what we're doing here on this side of the screens. And the blog, the public blog, is for the most part going to become a weekend project. I'm not going to be doing daily updates by any means. I might stick in a midweek post here and there, but for the most part, you can expect updated content Fridays or Saturdays or Sundays at some point. You know, I'll check in each week and we'll have something there. But there's plenty of educational information there already with the public webinar videos, with the different videos I've done on YouTube, with the information that's posted inside and the information to come. There's more than enough to keep anyone busy for a while. So I hope this helps. I look forward to working with you inside. If you're ready to get serious about trading and really make money, and I mean really make money, let's get to work. Best trading wishes.